My name is Dave Aquino. I am with valuecharts.com. I am the stocks and options live trading room specialist among my many hats that I do at Value Charts. And the webinar I want to bring you today is a little bit of a practical investment trading strategy. We call it Everyday Profits. It's a workshop that I developed about a year ago, and it is something that we use every single day in the trading room. Our kind of philosophy with our trading room is the fact that we want to be consistent traders that actually look forward to producing profits every day. You come in the room, your job is to generate a paycheck. And then we try to do that on a daily basis if we can. And then we also have different types of trades that, we bring home a weekly paycheck. So from that point of view, Everyday Profits focuses in on intraday trades. Now, we do have some traders that hold overnight and everything. I mean, that works too. But the types of trading I'm going to show you today is the stuff we can do and put money in our pocket every day and then go home with something to show for your work. The nice thing about it is you don't have to worry about overnight exposure. You never know if someone will come along and say something negative about your positions, so you don't have to worry about that. You come in every day with a clean slate with an eye for making money that day. The nice thing about Everyday Profits is that it gives you both a price and time framework you can work from throughout the day, so you have an idea of how the market is moving. So basically it's tactics to make money. All right, so let's go ahead and keep going. Just make sure that my screen is going forward properly. Okay, wonderful. Really quick risk disclaimer. I'm going to let you read that on your own. I'm not going to take up any of your time reading it right off the screen. But the most important thing is we want you to know that trading or investing carries a high level of risk. We've done our best to ensure the accuracy of this information. You know, it's developed for the sole purpose of helping you make your own investment decisions, and past performance is not necessarily indicative of future results. The next one is CFTC Rule 4.41. U.S. government wants you to know that trading is risky. You lose your money. Don't trade with money that you can't afford to lose, and I'm not soliciting you to buy, sell stocks or futures or anything like that. Past performance, again, is not necessarily indicative of future results. Okay, again, Reed gave you a little bit of history on me. The fact is, a lot of this is he already said, but when I was at the Vanguard Group, I worked in the asset management service, and that's where we managed high net worth client money. And my job was to create income strategies based on highly appreciated stock. So we did that for 12 years, and after that I've been with valuecharts.com for over 4 years now. I run the trading room every trading day, and from 9 a.m. until 1 p.m. Eastern time, and it is a boatload of fun. Now let me tell you, I wouldn't do it unless I really enjoyed it, and these are the trades we actually do in our trading room. All right, so what I'm going to talk about today is why should we trade intraday? What are the benefits? Now, okay, maybe I want to give it a shot. How much can I make in a day? What are some of the rules I can use for great intraday trades? And can you show me some trades that you've done? What kind of proof do you need in order to kind of believe and move forward with this program? What trade setups do I use? What trade setups work, and how frequently do they work? I'm going to actually talk about one of my favorite ones called the mid-morning reversal, and you can actually make money just by paying attention to the time of day, watching the clock. And I'll show you some charts from just these past week that we did and had very successful trades. We're going to also talk about how we use Everyday Profits to gauge the strength of the various markets, and what does that mean for your trading? What should you be defensive? Should you be offensive? Should you be bullish? Should you be bearish? What is the market's mood? Warren Buffett calls the market Mr. Market. Is he in a bad mood? Is he in a great mood? You know, it makes a difference because it will tell you what kind of day you're going to have. Is it going to be back and forth where we really don't go anywhere by the end of the day? Or is there a raging breakout? We're going to jump on that trend and ride it as far as we can. Okay, now I got a personal question to ask you. Okay, how much do you make every day? You know, if you have a job, how much do you make? If you're on a retirement spending program with your retirement funds, how much do you make a day? What would be your take-home pay to support you and your family? Specifically, what is your monthly income that you operate out of? Now, actually take that number and divide it, say, by 22. Okay? Here's an example. All right, this is what we call bringing home the bacon. That's why the bacon shot is there. All right, let's just use this example. What is your monthly? 3,000, say 30,000 a year, which comes out to 2,500 a month. Now, before taxes and insurance and all that kind of stuff, take that 2,500 a month, divide it by 22. That's the average number of business days in a month. And that comes out to $114 a day. Now, I have two 15-year-old twins, and their shoes, a pair of shoes, is more than $114. So I know that that is a relatively small amount. Okay, but $30,000 a year, roughly the average American makes $30,000 to $35,000 a year. It comes out to $114 a day. That's pretty tough. What would it mean to you to be able to boost that, say, by $50 a day or $100 a day? What kind of things would you like to learn? Would you like to learn that? So let's go ahead and keep that in mind as we move to this webinar and just think, there's some potential here. Why should we trade intraday? What are the benefits? Okay, hold on a second, guys. Sometimes PowerPoint freezes up on me. Why trade intraday? The cool thing about trading intraday or paying attention and being in the markets every day, you actually feel the ebb and the flow of the way the market's moving. I know I've been doing it for 4+ years, and I have to describe that environment to my traders in my trading room. But what's neat is every day it really is different. But just like every day and every week, every day during that week, there's a similar rhythm to it, okay? But what's nice is because of the rhythm of the day, rhythm of the week gives some constancy, some familiarity. But every day is different enough so it's interesting, and the market is different every day. But if you have the right framework and a right insight, it's easy to adapt as the market changes. One thing that's nice about everyday trading or intraday trading is that you know what the score is at the end of the day. You either walk away with more money in your pockets or less money in your pockets. Okay? Now there are days where the market's really crazy and you really don't feel like doing anything, but you still have that opportunity. Your goal is, as an intraday trader, is to have money in your pockets as you move through the day. Okay? And there are some days that you have enough money in your pocket, you stop trading, unless you see a really, really good opportunity. But really, you think about that. There's no pressure. Once you've made your amount for the day, you can close up shop and go enjoy the afternoon. The thing that I like is that there is no overnight exposure risk. You've always heard that, this happened like 3 weeks ago. CMG comes out. It looks like it's going to go down. A lone analyst comes out and says, hey, I think CMG is going to jump up 30 points in the next 6 months. The next day, CMG is up $20 at the open. So, I mean, those kind of things, it has nothing to do with the stock, nothing to do with the pattern. It just happened to be the analyst wanted to release that bit of news overnight, and the next day you're up 3%. So that's why, I enjoy the fact that when I do not have intraday, when I do not have positions overnight, I rest easier. So something to keep in mind. All right, so let's get down to it. How much can you make in a day? Well, again, like I said, every day is different, but each day is similar to the other one. And it's similar, like Mondays are similar to all the other Mondays, and Fridays are similar, etc. The trading day follows a similar pattern. Let me ask you this. If you're actively working, what is it like? You get up in the morning, you take a shower, you get dressed, you get in your car, you stop to get coffee, get to the office. Check your email, get your main work done, think about where you're going to go to lunch. Sound familiar? Then you go to lunch, you work in the afternoon, try not to fall asleep, think about what you have to pick up on your way home, get home, make dinner, see the kids, and then it starts all over again. Okay? Same thing. Trading actually follows a flow. And if you think about it, traders are just like you and me. We have the same types of mornings and afternoons. So the markets also have that. They have an active morning period in which lots of times there's consistent range-bound trades. Now there are days that there are potential breakout moves, but I like to say 1/3 of the time the market is bearish, 1/3 of the time the market is bullish. The other third of the time it's trying to make up its mind. There are opportunities and ways to trade in all three situations. Okay, here's an actual diagram of what I consider kind of an active morning. This is the these are the QQQs. They are moving, you know, bumping around. Okay, they come up, and this is the first bit of the morning, and then they sell off, and then they come back up. I think they continue lower. But the thing is, there is a flow, and I'll talk about this box in a little bit. But there are opportunities, a bunch of opportunities of trading this right off the bat. Okay, but that's what a range-bound type of active morning looks like. All right, on this particular day, oops, I'm sorry, we were trading, again, these are the QQQs, the NASDAQ ETF, and the cool thing was I watched the ETF because it's representative of the market. What's interesting in this move from here, okay, to here, hold on, let me clear this so it makes sense. So from this point here to this point here, the NASDAQ market moves down. Now when an index moves down, 8 or 9 out of 10 stocks in that index move in the same situation. This particular morning, I traded 10 contracts of Netflix, 10 contracts of, I think 5 contracts of Priceline. I'm looking at my notes here, okay? And these are Delta 70 options, okay? The options themselves are not as important as the fact that we traded it with the market. Those are puts there, these are puts here. For each point that they fell, we get about $60 to $70. Now you can see in this one move down from here to here, this roughly lasts about 10 minutes, okay, 10 minutes, 10 contracts apiece in Netflix and Priceline. I pull out about $250 apiece in Netflix, which is $2,500 total profit. And here, same thing, in Priceline, I had 5 contracts, so that's about $400 a contract. Okay, the reason why I know I traded Priceline because for that kind of move, Priceline it's a much bigger stock. I can put it that way. So right there, this particular situation, in the first trade of the day, roughly make about a little less than $5,000. It's not bad. $5,000, and that's roughly, I would say, about a 20% gain. Okay, if you're looking for the correct setup. Again, it's not a very big move, but it's active enough, and it sticks to the rules of everyday profits that we have an opportunity to make money. Okay? Again, that is a consistent range-bound type of trade. We also have potential breakout moves. I'll show you some examples of that too. Now, just like you work in the morning, then you think about lunch, then you go out to lunch with your coworkers, and then you come back, then you get back to work, right? Well, so do traders, okay? The markets go through a lull at lunch. And then it leads into what I call the springboard afternoon period. That period also can stay within the breakout, can stay going, it can, let me repeat, it can either break higher or lower if it's still range bound, or if it's going higher all morning, it could continue to go higher. Basically, is it going to maintain what it's done, or pull back, or continue? Here's an example of the afternoon session. Okay, so we're weak here at the open. We come down. Then we have this really strong move, and then we get this retracement move. This is one move right here I would trade. Okay, and then you can see through lunch, we actually stay within this general range, And what happens here when the lunch bell finishes, we take a nice move higher. Sometimes it goes back down. Okay, but we look for patterns when the market wakes back up. And this right here, my friends, we call this a late day snapback. I nailed 2 of those over the last 2 weeks. Very strong, substantial move, and this is usually on a Friday. Okay, I believe that was Friday last February. Okay, that's in the QQQs also, 5-minute chart. Okay, this particular move here, moving higher, this is the afternoon session. That's where we took this trade in Tesla. We had calls, and I believe this one we had 10 contracts. So we made about $180 a contract, and we made $1,800 in the afternoon. Again, these are not spectacular days that you only come across once in a while. This is, like I said, every day. Now you may not get the snapback, you may not get the breakout, but you will get the patterns according to the setups in some time within the day. I would say normally the trades that we do based on everyday profits, we get 2 or 3 pretty good trades every day. Okay, something to keep in mind because the consistency is a question. Now, some of you are probably asking, do I have to trade options? In order to enjoy the leverage, yes. But I do have traders that trade this in futures, and I also have traders that trade this with leverage ETFs. Of course, the options magnify it more. But again, what matters not so much as the leverage, is the consistency. Okay? And someone's asking, it's a little bit too fast for me. Yes, the reason why I showed that screen is because it's easier to see how it moves, but normally we trade on a 2 to 3 minute chart, and the entry point usually is anywhere from 6 to 10 minutes. It's not like it immediately turns on you. And the majority of the time, and this is very substantial, have you ever been waiting for a trade, maybe in another trading room, and all of a sudden the trader goes, hey, buy this. All of a sudden, you're sitting there drinking your coffee and, you almost spill it on yourself because you're thinking, that came out of nowhere. For everyday profits, we actually are like a hunter, camped out in a place where we know the prey that we're hunting lives and visits at a particular time. So we sit and we wait for the opportune moment to go ahead and take action. It's the same thing with everyday profits. It doesn't catch you by surprise because you are watching for a specific behavior. And when the stock behaves a certain way or the index behaves a certain way, we take advantage of the trade, and we actually know where we have a very good idea where that trade is going to, and then we go ahead and take profits along the way. I almost never take profits at the final target. I'll take my trades off piecemeal. I said I traded 10 contracts. I'll take 3, 3, and then 4. That's what I normally do. Okay, I take off my trade in pieces. All right, so with that introduction, let's just talk about some rules for great intraday trades. Okay, know that each trading day actually has 2 distinct halves, like a college basketball game. You have the first half and you have the second half. After morning session, which is my favorite, and then afternoon session. Okay, those are distinct times separated by lunch. Now, the thing about lunch, I usually have traders that come in because maybe their schedule only allows them to be in there at a certain time. Can you take profitable trades at lunch? Yes, if the setup is there. However, if we're going to optimize what we're trying to do, it is actually more important that we take them in the more active periods, kind of like the half times of a basketball game. You don't want to trade when the market is just kind of moving and kind of vacillating, in a very tight range. That's usually what lunch looks like. You want to be active in the morning or active in the afternoon. Okay, like I said, beware of the lunchtime lulls. Now, remember what I said? I showed you the very first chart, and I said this is in the QQQs. And then, but I took the trade in those individual stocks like Priceline and Google, things like that. It still follows the case that I pay very, very close attention to the market, whether it be the NASDAQ or the S&P or the Russell. But majority of the time, I'm always looking at the S&P, and because of the stocks that I trade primarily look at the NASDAQ. It is like if you're a sailor, okay, or if you're a sailor, you want to go out with the tide and come in with the tide. You don't ever want to fight the tide because you will find yourself always at a disadvantage. It's the same thing when you're trading. Follow the index under which your stock goes. And you don't have to differentiate too much because the S&P and the NASDAQ are almost exactly the same. You got 100 stocks here, you got 500 stocks here. They're not exclusive. So the biggest stocks in the NASDAQ are always the biggest stocks in the S&P as of right now. So you follow the indexes and you trade in the direction the indexes are going. If the index is not moving, I would be very wary to trade an individual stock. Okay? I do trade the QQQs. I do trade the SPY. I also trade the SPX. You can trade the indices. I do that all the time. If I don't find a stock that seems to be behaving exactly like my index, I'll trade the index. And some of my traders, because they have smaller accounts, they'll just trade SPY and QQQs. The option contracts are small. They can get a good feeling of how to trade, and they do quite well. Okay, we watch the performance of the index. Is it bullish or bearish, or is it really kind of neutral? Okay, what is the momentum? Is it a very bullish day? Is it a very bearish day? Or is it kind of range bound? Okay, there are different ways to trade those, and it's laid out in everyday profits. Okay, match the index to the stocks, just like I said. Now, what trade setups work and how frequently do they work? There are a couple of different kinds of trading days. Okay. The first kind is our range-bound days. That's when you come in, the markets make and establish, they come in, the market opens, and for a little bit of time we call that the opening range. It establishes a high and a low, and the price moves within that high-low structure back and forth. I'll show it to you in a second. But there are distinct ways to trade that because you're looking, it's almost like playing with a tennis ball inside a very small bedroom. You can only go back and forth. You can't break out of the sides. That's kind of range-bound trading. When it's a range-bound trading type of morning or even afternoon, we tend to look for reversals. Double tops, double bottoms, inverse head and shoulders patterns. Sometimes you'll get these single tops, single bottoms. Those are actually harder to trade. But double tops and double bottoms are my favorite. And they create what we call bullish and bearish divergences. If you've ever traded that, it's actually very easy. The hardest thing to know is where are the levels that they're bouncing off. It's like little force fields up and down. If you know where they are and you watch for them, then it's easy to trade. It's like hunting at a watering hole in Africa. You know all the animals have to come to the watering hole, and that's where they stop, congregate, and leave from. So if you set up right there, you can always have the opportunity to take action. Okay? This is the idea of range-bound trading. You see price moves up, makes basically this is a triple top head and shoulders pattern, and it pulls all the way back down. Now this is the opening range. Here's the low of the opening range, here's the high of the opening range, and we move back and forth. If you notice, there's an inverted head and shoulders pattern. See that? And we go right back up. Okay, this is a range-bound kind of day, and we made a good amount of money on this particular day, specifically from this move right here. Okay, this is the low, and this is the move. Now I'm showing this to you in the QQQs, but I believe, if I remember right, let me see. I'm trying to remember. I think I don't have that slide, but I can figure it out for you. Here's the QQQs, and usually you can either trade the QQQs as SPY, and if the SPY moves like this with the same amount of points, usually this is about a 5-point move in SPX. 5 points in SPX. Now, half a point in the SPY. This roughly is about anywhere from 200 to 250 a contract. Okay, it's pretty substantial. If you're trading 10 contracts, you can make close to $2,200 on this little move. Okay, and this probably takes about 15 minutes. Okay, someone's going to say, this time frame's too tight. If you watch this on a 5-minute chart, you can take that trade also. Okay, here's an example of what happened this week. You see, actually last week. This was last Thursday. Okay, here's the SPX on a 2-minute time frame. We watch this movement all the way up, okay, and then we look for a reversal pattern. And what happens is this is the trade we actually took. This one down here. If you see, we go from roughly 2060 all the way down 2054. This area right here. Okay, that is a 6-point move in the SPX. Okay, that is roughly $70 a contract, so it's a little over $400 plus. This thing starts at like 10:12 and it ends by 10:13. It's 18 minutes. Okay, 18-minute move to a known 618 retracement level. Again, this is a range-bound mid-morning. This is my typical mid-morning reversal. And I tell my traders all the time in my trading room, if I'm going to retire to a nice sunny beach in Florida on the Gulf Coast, I will have a laptop and a Wi-Fi connection, and this is all I will trade. I will take one trade a day. Now this trade, the mid-morning reversal, usually comes about 3 times out of 5 times every week. If you give me this trade, I will make money consistently every day it's available. And then after that time period of about an hour, close up shop, go do something else for the rest of the day. This is my favorite trade. I have traders that trade this in SPX, SPY, the E-mini futures. They do it every single day. And I have people from another trading room, they come in, that's all they trade, then they leave because they made their money for today. Again, that's the idea of you come into work, you make money, you put money in your pocket, and then you have no after exposure. Okay? Roughly, I'd want to be in the trading room an hour, but the actual time in the trade is 18 minutes. Yes, Eastern time. I'm located outside of Philadelphia. Here's another one. This is 5:13. That was Friday. Okay? We gapped down. Okay? What did we do for the first basically 20 minutes? We moved back up, we filled the gap. I didn't trade the gap. Gaps are, to me, a little bit shaky. They could just continue running. There's a reason there's a gap. But this gap, this is the trade that I actually took. Actually, I had 2 mid-morning reversals. I took this trade, and this is Amazon, and then I took this trade. Okay? So from Amazon at 519 down to 719 to 713. This is roughly, this one, $380 a contract. Okay? And then I play the reversal. This one, this bounce here. This one is roughly a 160, about half the other one, 150, 160. So from, what's that, quarter of 10, well, let's say 10:15, so 30 minutes. We pull in probably close to 40, like $550 per contract. Okay, these contracts usually run anywhere from 1,000 to 1,300 a piece. So yeah, I made $550 on, say, $1,500. That's a 30% gain in this course of 30 minutes. Okay, we do this in my trading room all the time. Okay, mid-morning reversal. I told you there's a reason why that's my favorite. Now there are days the mid-morning reversal is not there. Lots of times, just as a little secret to you, Mondays they're a little bit less prevalent because Mondays markets have a tendency to break out. Okay, so again, this is more breakout trading. Some more examples. I look for strong momentum moves. Best time to look for breakout trades are Mondays, sometimes Fridays. Okay, so I'm looking at the same range, okay, like before. There's the high and there's the low of the opening range. So what do? We just continue going lower. When the opening range closes, you pay attention to momentum. Where's the direction of the momentum? Going down. Now this is our MQ momentum indicator. You could use MACD. And what does it do? It continues to go lower. Okay, this is the SPY. Just as well you could be trading SPX. This right here is a 2.5 point move. Actually, it's a 1 point move in the SPY. It's a 10 point move in the SPX. This right here, folks, this is a lot of money. Let me see. Yeah, that is probably close to $500 right there. If you're trading the E-minis, same thing. This is about an 8 point move. You made $400. $400 right there. Okay, here's another example. I'm sorry, that's the breakout trade, and lots of times that is in the afternoon. Okay, or morning sessions that the market just runs and runs and runs. But I'll tell you, you might get one of those breakout moves in the morning once every 2 weeks, maybe 2 out of every 2 weeks. The back and forth mid-morning reversal trades, you'll see it 5-6 times in those 2 weeks. The breakout trade like this, sometimes it happens in the afternoon. But again, you have to pay attention to momentum and the time and the opening range. Okay? Here's a late day snapback trade. And this was from the 12th. This was Thursday. You can see right down here, this is in the SPX. This was an extremely cool move, I'm telling you, because I was running a small class with a group of traders, and not this day because it was Thursday. This is a late day snapback. Usually this is what happens on Friday. Here, 12 noon, we make this low at 20.53. We put in this high roughly 3 o'clock, and that is at 20.70. So from 20.70 all the way down to here, 20.62, we get not only a late day snapback, but we get a full 50% retracement. This right here, this late day snapback is 8 points in the SPX. This is a little more than $550 a contract. Okay, I'll tell you, I traded 10 contracts, folks. So from 3 o'clock until almost 4, I pulled out over $5,000 in a move just lasted a little over 45 minutes. That's a really cool way to end the day. Okay? This late day snapback probably happens 3 times every 2 weeks. Lots of times I'll look at it on a Friday. Trust me, you get this trade on a Friday afternoon and you pull in $300-400 a contract, it makes it really easy to pick up the tab after hours. Okay, you feel good, and the thing is, you have no position to hold over the weekend. I closed out probably right in this area about, I'd say like 6 minutes before the closing bell, because it was enough. It was enough. Okay, and the thing is, I had a lot of certainty. A lot of you asked me about consistency. My goal is to get in and out, take my money, and take only those trades that I know I'm looking for. I'm not going to be guessing, okay, which one's the bottom, which one's the bottom. This one's actually easy because it's a inverted head and shoulders position, and then it runs higher. But the point is, this late day snapback that I'm showing you is textbook. It almost starts on the minute. Okay, a lot of those reversals are 50% retracements. In the indexes, sometimes they touch the 50% level within a couple of pennies. It's crazy. It's like it's like a $1,300 position. It's actually a $2,000 position in SPX, and it touches the 50% retracement almost to the penny. It's like scary accurate. If you have a futures room, Liz, oh hey Liz, you're always in there. You can trade that in the futures, dear. You know that. How long do I buy the options for? I usually buy the weeklies expiring that week. SPX, I traded the Delta 60 to Delta 70 options that expire the next day. Because remember, this was Thursday the 12th. So I traded the ones that expire the next day. And usually in SPX, they'll run $7, $8, $9 on Thursdays. It's a really sweet deal because that $9 option, it increases by about $5.50, $6. So it's now worth $15. It's crazy. All right, let me share you a couple other secrets here before I run out of time. Yes, I do lose. I do lose. Sometimes I'll trade a double bottom and it turns into a triple bottom. I'll get stopped out. I'll watch it. When it starts to resume, I'll get back in. Again, it's consistency. It's consistency. And then again, when you have range bound, when you have an explosive move and it kind of keeps running, you have to pay attention to the time of day because sometimes you're trying to trade a reversal. I'd probably give it like 2 shots, and then if it doesn't work, I stop and I look and I reevaluate. I don't have to be right every trade, but I like to be right on the types of trades I'm taking. Okay, it means I'm in sync with the market. If I'm out of sync, if I'm out of sync with the market, I'll know because my P&L will show. Okay, but if you want more proof, you can come into my trading room and trade with us, and then you'll see. You'll see how consistent we are after being in there a week, after being there a month. All right, so again, just a little couple of tips. Trade the mid-morning reversal and you'll make money just by watching the clock. Okay, every day is different, but every day is similar. Watch for the mid-morning reversal. In the afternoon, watch for pullbacks back into the opening range or continuation and breakout. If we're bullish in the morning, you're either going to be more bullish or you're going to pull back to where you were at the beginning of the day. Makes sense, right? And then watch for those end-of-day snapbacks. Those things really help. Okay? And again, this is that one I showed you before, at late-day snapbacks. This was you can look at it. I think it was February 5th, February 4th. Okay? This was a Friday. Nobody wanted to leave money on the table on Friday. They just took it all. And trust me, you know when a late-day snapback happens and everybody panics because everybody was bullish and they made money all the way up and they just want the bell to ring so they can cash in and they can show their trading boss that, hey, look, I made money today. When the market starts to fall, trust me, everybody heads out for this late-day snapback because everybody below this point, everybody above this point where it closed, everybody up here, they lost. If you bought, you lost money on the day. That's a very sad place to be on a Friday afternoon. Okay? All right, so just a couple of other things. Gauge the strength of the market. 80% of the time the markets do move together. Some are a little bit stronger than others, but very rarely will you have one index like the Russell and the S&P going in completely opposite directions. More likely that the other index is not moving, and then you have some sort of bearish reason it's going down. It's kind of like the Nasdaq on Friday. Apple was a drag. It just is. Okay. Sometimes, again, one index is stronger than the others. If one index is leading, the other markets will usually perk up and follow that. Perk up is relative because it could perk up and go down. All right. Pay attention to the market's mood. Is Mr. Market good mood and really bullish and manic, or is he really bad mood and it's falling and nothing could work out? The world's going to end and the market just continues to fall. That's the range. And then you have that kind of seesaw kind of day. Mr. Market doesn't want to do anything. He doesn't feel good, but he doesn't feel bad. That's a seesaw kind of day. Trade reversals. Okay, so go back to your questions, your calculation earlier. Whatever it was, do you bring home the bacon every day? What was that daily income number? Remember the one we used, $30,000 a year before taxes is $114 a day. Okay, that is not much, folks. So basically, you're talking about in order to increase from that to $50 a day, that's an additional $10,000 a year. That's not a small amount of money, but that's one substantial extra trade a day that is positive, can make a big influence on your overall P&L for the year. $100 a day is even better. That's an additional 20. You increase your income by almost 66% by bringing home an additional $100 a day. Okay? Oh, actually, because we were working on 25,000. Yeah. So I mean, right there, you almost double it. Okay. So what would it be worth it to you to do that as a trader? Because you really want to make a go of this. You want to be consistent. You want to bring home the profits. You want to sleep well at night. You want to not worry. Well, this is what I can do for you today. This Everyday Profits workshop is available to you now. And I've had traders on a Saturday webinar take the Everyday Profits, spend the night watching it, and then If they're really dedicated, Sunday they'll go back in there and take notes, watch it a second time. It's about 2 hours. And then Monday morning, they'll trade. I've had emails from people that have told me they've made enough money to cover their costs. I've even had one guy tell me, Dave, I don't believe it, I made well over $1,200. And it was kind of new to trading. He had some option experience, so he had a little bit of a head start, but he made $1,200 on his first trade. His first trade. So the potential is there. You just need to get the guidelines. Again, I'm not here to teach you how to trade a double top or a double bottom, but I'm here to give you the framework, time, and price. And actually, this workshop comes with a summary, a time index summary of about 12 pages after the slides. I'll give you a copy of all the slides, but at the end, there's a 12-page summary that has distinct times during the day. All you have to do is be on the right page at the right time, and I tell you exactly what to look for. The only thing better that I could do is sit right beside you and say, okay, Joe, we're going to do this. Now we're going to look for this. Take that trade. That's basically what that handout is. It's a time index guideline that you can print out, have with you right there, and it will tell you, trust me, after a week of that, you'll know exactly what to do. You won't need that slide and those papers anymore. But the webinar offer today, normally this is like a $500–600 program. I'm going to give it to you for $297. Now the link is valuecharts.com/profits. Okay, it is. I can't tell you that how important this workshop is to the success of a lot of traders that I work with. Okay, hold on one second, guys. Did that go through with the chat? There it goes. valuecharts.com/profits. This is extremely useful to make money intraday. Now I have swing traders. They say, Dave, I can't trade intraday. I said, okay, maybe it's a little too fast. I said, but I do credit spreads. I said, well, when do you buy your spreads? I'm like, I don't know, when it kind of looks good. Well, if you get an idea of how the markets move, you can tell if it's at the high of the day or pretty good chance at the high of the day or the low of the day, pretty good chance there. So you pay attention to those levels, and it makes a difference. So go ahead and go to valuecharts.com/profits. Oh, here's some, there's that price line trade. Sorry about that. These are some of the examples of the trades I took going back. Usually they have the charts there. I apologize. Again, the offer is $297. That's a substantial discount, and I firmly believe if you take the time, review the workshop, print out the time indexed instruction manual, basically is what it is. It's 12 pages, and go throughout the day, you're going to find yourself with opportunities, 2-3 opportunities every single day. I mean, that could be 10 to 12 a week, folks. They're there. You just need to know what to look for. Let me help you get there, and I think you're going to find a whole lot of success. When you get those winning trades, send me an email because I want to hear about it. So again, go to valuecharts.com/profits, and that's, I believe it's almost a 40% discount. So take advantage of it. I look forward to hearing about your success. Don't let this pass you by, because I've never seen a workshop that actually gives you this kind of information. It's kind of like a how-to manual for trading intraday and the opportunities there are. Okay? Now this is a one-time cost. This is a one-time cost. And I do talk about the price targets also in the workshop.